Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit on every trade every day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and risk levels for the upcoming day of key U.S. financial markets. It is currently 7:30 a.m. Central Time, and I am recording this in preparation for the market day, December the 29th, 2014. Full disclaimers are at the end of the video, but you should be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into the key highlights on today's market report. As you would expect, markets are very quiet right now with the holiday seasonality, and so not a lot has changed since the report from Friday, but there are some important things to dive into, and we'll certainly touch on those. Markets overnight were generally a bit weak. You see all four indices here were down just a little bit, as was gold. Probably the most interesting aspect was with crude oil, which was up about 70 cents or about 1.28% in the overnight action. So in terms of the foreign markets, the Shanghai just barely up. More of note is Hong Kong. The Hang Seng Index was up 1.82%. DAX was down 0.78%, so a little bit of mixed messages coming from our overseas markets. In terms of macroeconomic reports for today, nothing really of any consequence for Monday. We will have a lot more activity with the key economic reports coming in on Tuesday and Wednesday of this week. You can see a number of red flag reports coming into play. Obviously, this is an altered week. We'll have unemployment claims on Wednesday, for example, with the markets being closed on Thursday. So just be aware of that. In terms of our market condition, we are obviously still strongly bullish in all of our primary trends with all four indices. So that is our dominant aspect right now. When we look at our volatility metrics, we see that we are in the bottom half and implied IV percentile across all the markets, so relatively quiet. We did have a little bit of a pop in two of the indices, the Russell and the NASDAQ. We had more than a standard deviation move on Friday, and that was the first action in several days of any significant action, price action on the four primary indices. In terms of our regular daily report and market opinions, no futures rollovers this week, so that should be relatively quiet and won't have any impact on trading of this week. Market trend, our intermediate term posture is still a bull flag, bull flat. We are seeing higher highs, higher lows, and that is still the case. We continue to have this divergence between our portfolio trader posture, where we have an uptrend under pressure, bit of a warning there, whereas our active trader market posture, we are okay to go with both intermediate term bullish trades as well as short term bullish trades. So a divergence still exists between these two key postures that impact our market timing. In terms of position sizing, this also has influences here on the portfolio trader position sizing model. It is saying only 0 to 25% depending on how your current positions are acting, and again, that's a reflection of that uptrend under pressure from the portfolio trader posture. And with respect to our volatility, with the VIX between a 12 and 18, that would seem to say that we're in relatively stable conditions and we can be 75 to 100% of our full position size on any new positions that we should take. So bit of a divergence being reflected here as well. Market timing in the short term, our one-day outlook slightly bullish. Our 3-day outlook also slightly bullish. From a seasonality standpoint, the last day of the trading year is usually quite bearish, as traders will often, in particular investors I should say, will often dump their losing positions to take write-offs to counteract the profits that they have gained on other positions, and try to reduce their taxes. So be aware that the 31st will often be a down day. In terms of our market timing opinion from the market forecast, we are very bullish and in the upper zone in 3 of the 4 indices. So very strong action from that standpoint. If it just wasn't for this uptrend under pressure coming into play, our hedge warning status would probably, well, most certainly would drop. We are still currently threshold level 1, which is our break or yellow light. We have had a lot of the warning signals de-escalate in recent days, but because of that uptrend under pressure condition, we still are at level 1. No real change in the number of our volatility metrics. We are in intermediate trend with SPX and Russell having a higher high. NDX is still not put in the higher high. We talked about this on Friday, and this is a warning sign for our overall bullish trends, because normally we look for the NASDAQ to drive the S&P 500 and not be a laggard. We still have quite a number of distribution days, especially in the NASDAQ. We've had 7 NASDAQ distribution days in our time frame, including 5 during the month of December. So that is another area of warning. VIX phase, we did actually move up a little bit on Friday. We're still hanging around that 14.5 kind of area. And but in general, VIX has been trending down, and we would expect that things will start to drop on the VIX in general. The next thing I wanted to draw attention to was on our sectors. Note that we've had significant improvement across all of our key sectors, with the one primary obvious example of energy. Energy continues to be the weakest of all of our sectors, but all the other sectors have seen dramatic improvement in recent trading days, and even energy has started to see some improvement. This was down, down, and down across the 3 time frames not that long ago, and you can see in the short term it is up, in the intermediate term now neutral, though the long term still remains down. So quite a bit of weakness. In terms of the most recent action, as you see our asset class analysis here, utilities, healthcare, and consumer discretionary continue to dominate as the best performing sectors, and this should be where the heart of your core portfolio investing activity should be. Energy, as you see, continues to be the weakest area. You will note that in the 5-day, energy had quite a little pop, so certainly a bit of a departure from the bottom, but still quite weak compared to other places. And unless you are adept at bottom fishing, you probably are better off to invest your time and trading capital in towards those utilities, healthcare, consumer discretionary areas, and would look to have a more consistent, less volatile performance. So in terms of key industry groups from our shadow trader friends, we would point you to retail, railroads, transportation, internet, and healthcare as being the key industry groups. So between the sectors and the industry groups there, you certainly see the theme around healthcare for sure. Internet has also been doing well, and we've seen quite a bit of activity. XRT has had a very good season of late, so you might want to take a look at some of your favorite retail stocks and see if they're giving you some signals. That is the primary highlights for the trading action of today. Obviously, as always, we appreciate you following us on your blog favorite, or to like us on social media. Obviously, lots of benefits to being in the room. I'll talk more about that on a day when we had less to cover. As well as if you want more information, we do have 2-week free trials for any of our live trading rooms. Additional information can be found on the website as you see here. And then, of course, we always welcome your questions at support@falconglobaltraders.com. Your disclaimers, you may pause the video here if you'd like to read this at length, but everything should be covered there. As well as we always thank you for your listening to us and your feedback and your liking us on your social media platforms. Thank you very much, and we'll talk to you again for the market open for tomorrow. Thank you.